Hello, I'm Peter Towers, Managing Director of ESS Small Business. There are tremendous opportunities for investors under the Early Stage Innovation Company legislation. What is an early stage innovation company? These are a new corporate structure that the Australian government legislated for and commenced operations from the 1st of July 2016. The legislation is targeted at companies who are developing new products, processes or services. In the main, the companies have to be under 3 years old, but in some circumstances the companies could be under 6 years old. There are three tests that the companies have to comply with, and they have to pass 2 of those 3 tests. The first test is the provisional test, or that's the name we've given it, because it looks at the age of the company, whether its income is under $200,000 in the previous income year, not including any grant income from the Accelerating Commercialisation Grant. The company's expenditure in the previous income year has to be under $1 million, and the company cannot be listed on a stock exchange anywhere in the world. That's the provisional test. So assuming that a company has passed those questions, they can then move into what is called the gateway test. Within the gateway test there are 8 subjects for consideration, and the company can earn points from each of these subjects. And these subjects include research and development, whether the company has been admitted to the Accelerating Commercialisation Grant Program, whether the company has participated in an Accelerating Commercialisation Program delivered by a registered organisation, whether the company has been able to raise more than $50,000 from arm's length investors, whether the company has been able to register a patent, plant patent, innovation patent or registered design, whether the company has an agreement with an organisation that is specified under the Higher Education Act or the Research and Development Act. There are points available for each of these subjects, ranging from 25 points to 75 points. What the company has to do if it's going to qualify under the gateway test is earn 100 points or more under the gateway test. If a company has successfully completed the gateway test and earned more than 100 points, and obviously it's already passed the provisional test, then the company has self-assessed as an early stage innovation company. However, if the company was unable to accumulate 100 points under the gateway test, it now must move into the third and final series of tests, and this is the principles-based test. Companies who gain acceptance as an ESIC under the principles-based test will normally be very new companies who have just completed their research and development, perhaps as a sole trader or a partnership, and have now decided to incorporate a company to assist with the capital raising activities. To be assessed under the principles-based test, the company needs to positively answer 5 questions. Is the company generally focused on commercialisation of a product, process, service, organisational or marketing methodology? Does the company have high growth potential? Does the company have the ability to scale the business? Is there a market opportunity broader than the local market in which the company is currently operating? And does the company have competitive advantages? If the company is able to successfully answer these questions, that would be great, but most companies' board of directors will have difficulty answering those questions and supplying the required supporting evidence unless they obtain an independent report from an arm's length professional consulting firm who are able to review the company's operations, look at the company's business plan or documents as to what it wishes to achieve, and have that report as the key supporting document for investors and the Australian Taxation Office to review. This legislation has been established on the basis that it can be a self-assessment process, so that the company will be able to undertake these tests themselves. But then they need to convince investors that they have undertaken these tests in an appropriate professional manner. At some stage, all of this material is going to have to be submitted to the Australian Taxation Office and AusIndustry. Now, it can be submitted to the Australian Taxation Office and AusIndustry at a very early stage for them to review the material and decide whether the company is an ESIC. I expect that this process will take a considerable amount of time, and there is no expectation from our point of view that the ATO or the AusIndustry will undertake this assessment process unless they receive all of the supporting information. If a company is able to convince investors that they have successfully self-assessed, and this could be in particular relating to the provisional test and the gateway test, then an investor can invest in those companies. But ultimately the company will have to submit the information to the ATO as part of the company's tax return that follows when the investment was made. Obviously, with the principles-based test, we believe the company will require an independent arm's length report. ESS BizTools and ESS Small Business has developed a package which we call the ESS ESIC product package to assist accountants to undertake this due diligence process of companies to determine whether they have appropriate reasons to be able to classify themselves as an early stage innovation company. So what's all the fuss about from an investor's point of view? Well, this is the only investment that I know of in Australia currently that you're able to obtain a 20% tax offset on your investment. The maximum investment for a sophisticated investor is $1 million to obtain the offset. So that would mean that for $1 million in a year, the investor would obtain a tax offset of $200,000. And if you don't use all the tax offset in 1 year, it can be carried forward to subsequent years. For a retail investor, which is anyone who obviously is not a sophisticated investor, the maximum investment is $50,000, and therefore the maximum tax offset is $10,000. Investors in an early stage innovation company also are eligible for a capital gains tax exemption if they hold the shares for more than 12 months and less than 10 years. Then there is no capital gains tax payable on that original investment. So if you invested $500,000 into a company and subsequently your share of the sale proceeds of that company was $3 million, the $2.5 million profit is tax-free in the original investor's hands. If you would like to obtain a copy of a special paper that we have written, Tax Incentives for ESIC Investors, please go to our website esssmallbusiness.com.au and click on to obtain a copy of that paper, and we will forward it to you. And if you would like to participate in a special webinar that we are conducting on Wednesday the 14th of September at 5 p.m. on ESIC Investor Opportunities. Please also, whilst you're on the ESS Small Business website, register for that webinar. If you have any questions about any aspect of investing in a ESIC type company, you can obtain details from the accountants and advisors who are registered on the ESS Small Business website. Just click onto the accountants advisors directory, and then all you have to do is to insert your postcode, and the system will identify to you accountants and advisors who have registered with ESS BizTools who are in or near that postcode, and then you can have a conversation with those accountants or advisors to determine the type of services and advice that they can give you to help you in your investment. Good luck with investing into early stage innovation companies. Have a wonderful day. Goodbye.